Today, I want to revisit the beginning of my investment career and address the burning question: why income investing? I'll explain my top 4 reasons and break down why they're important. Having a set philosophy can help you stay on track. I've learned through experience that what people say about their priorities or focus is often not reflective of what truly drives them. I spend a lot of my time talking to my friends about specific investments and investment opportunities that can help them achieve their income goals. Those goals can then, in turn, help them achieve an abundant retirement filled with opportunities for them to explore and enjoy. One question I often get is, how did I get into income investing? There are so many different styles of investing, whether you're moving with the momentum traders, optimizing options, or something else. So why did I end up investing for income? Well, today I want to take a moment to step back and look at the top 4 reasons that I invest for income and how these reasons might benefit you. Reason 1, income today, not tomorrow. The main reason I invest for income is because I want my money today and not tomorrow. While some may point out that's the opposite of investing with the idea of delayed gratification, I would counter by reminding people that there is something called the time value of money. When it comes to risk and evaluating investments, we'll tackle that in a minute. But first, let's simply talk about what happens to money over time. Everyone has become very comfortable with the concept of inflation, especially since 2020. Moving forward, inflation has been something that is in the headlines regularly. When inflation was a sleeping giant, moving at only 2 to 3% a year, investors and retail consumers rarely noticed its impact. But at times when the inflation beast has awoken and is raging, everyone begins to notice its effects immediately. It's hard to go to the grocery store or the gas station, see the prices we're paying now, and not recollect having paid significantly less just a few years ago. This was similar to what happened in the 80s in the United States economy. When inflation ran rampant, we saw price increases of up to 10% within a year for various goods. If I'm making an investment with the hope that it'll pay off in the future, I have to recognize that the further out that future gets, the less valuable the dollar gives me. Let's look at an example. Suppose I buy a Big Mac today for $5 and that same Big Mac costs $10 a decade from now. If a $5 investment from today only grew to $9 over that time frame, arguably eroded by inflation, it has been a bad investment in comparison with one that generated a 6 to 8% dividend every year. Sometimes we get so focused on the real value return that we miss adjusting it for inflation. Did you know that the S&P 500 is at record highs, which is about 500 points above its last peak in December 2021? When using the inflation-adjusted numbers, it's still 100 points below that prior peak. Inflation is the sleeping giant that erodes the value of everything in our economy. To help combat inflation's effects, I'd rather take my money right now while it's more valuable. I don't want to gamble that my return, and its inflation-adjusted worth, might be higher sometime in the future. Reason 2, decreasing risk. If I offered you $1 now or $2 in 10 years, which would you pick? If we're being honest, the vast majority of us would take the dollar, right now. This all ties back to the well-known axiom that a bird in the hand is worth 2 in the bush. When you have something guaranteed in your hand right now, it's better than risking that it might be worth twice that much in the future. When it comes to dividends, every payment you receive from a company is a locked-in guaranteed return. If your investment eventually ends up going to zero in value, you're not going to have zero to show for it because you still have all of those dividends you received. This essentially reduces your overall risk by repeatedly taking a portion of that return into your pocket. The longer you are an income investor or dividend investor, you'll have several holdings where you have received more in dividends than your initial investment. When I look through the list of investments in my personal portfolio, I have a growing number of investments that have paid me more in cash than I ever paid for the shares, and those shares still have value and cash-generating potential. Every dividend you receive takes some risk off the table from your portfolio. Reason 3, stronger companies. To be able to pay and effectively cover a dividend, the company paying it must have free cash flow. We have seen that many popular companies obtain public investments and then crash and burn, never turning a dime of profit. Many of these will carry multi-billion-dollar valuations but have never actually generated a profit because people are hoping that this constant cash burn will eventually produce something phenomenal in the future. I've personally seen this in the past, taking a look at the 1990s or even 2007 when no one cared what the value of a home was because they would give you a mortgage anyway. Both of those didn't end well for the investors. Investing in strong companies that are listed as dividend kings or dividend aristocrats have a long history of paying consistent dividends. They can help you avoid many weaker companies. Reason 4, flexibility. A teacher I know used to say, Blessed are the flexible because they are never bent out of shape. When it comes to life, there is one thing that has always been constant, and that is change. Change is everywhere, whether it's the changing of the seasons, marking a new year, or even the changes that we've seen in technology, both rapid and incremental. The issue that so many people battle is when they get stuck in a place and are unable to adapt to change. There is a higher degree of flexibility in receiving income from my investments than having my money locked up for long periods of time. When you're invested in income investments, they are routinely providing cash into your pocket that you can use wherever and however you want. I think that having cash provides me with the highest level of flexibility. I don't have to sell any of my shares of stock to get cash. I don't have to try and cash out a CD. I have cash in my pocket from my investments month after month and year after year. That cash allows me to pay for my expenses, take care of emergencies, or even reinvest in my portfolio if I want to. I can do whatever I want with it because it is cash. I used to love it when my parents or grandparents gave me cash as a gift because it allowed me to do whatever I wanted with it. When I was a kid, receiving cash felt like I unlocked an opportunity to explore so many things. Being an income investor means that every single month or quarterly, the companies in my portfolio provide me with cash that I can use however I want and to be flexible with. When it comes to managing daily life, that's a big benefit. So we've looked at my top 4 reasons for becoming an income investor. There's nothing overly revolutionary in these reasons. They're all very straightforward, which if you think about it makes a lot of sense considering that when you are starting out as an investor, there is a lot you don't know. I've found that so often in life, the younger we are, the more set we are in our convictions, but also the less educated and informed we tend to be. When I approach income investing, I am looking to have a high level of flexibility. And even at retirement age, I'm still learning new things every day. I want to invest in companies that are strong and able to cover that dividend, which means that they're turning some level of profit. I also want to take some risk off the table on a routine basis without having to sell my shares of stock because I'm receiving a portion of my return on a regular basis. Last of all, I recognize the impact that the future can hold with inflation or other macroeconomic events, so I want my money today. I don't want to have to wait for it tomorrow. Taking all of this into consideration, I'm able to invest for income and see all of these benefits immediately. When it comes to retirement, you're not going to want to sit around and wait for your money. You're going to want it now to be able to enjoy it. While I don't think you should necessarily blow all of your money in the first 2 to 5 years of your retirement, I also don't think that you're looking to wait until you're 90 before you see any real value from your portfolio. Inflation is a real force. Bills are an ever-present reality. One way to combat these is by having an abundant, raging river of income flowing into your account every single month. That's the beauty of income investing. If you found value in this video, please consider hitting that like button. Subscribe and leave a comment below. And as always, keep your feet on the ground and keep reaching for the stars.